So looks like the market finally broke out to the upside while I was off doing other things. We can see on Friday right at the end of the day, I guess people realize with the huge spread in the polls in France, they're probably better off going out long than short. Most likely what caused this move. I think it was the first up move, positive day for the market on a Friday in a while. Closed at 240 this morning. We are down about 50 cents at this kind of high from here, from April 26th. So the burden at this point, though, is on the sellers to show that we aren't going to start a new up move. Here's the daily. So if we step back and we look at it, the top was at the beginning of March. So 2 months basically of consolidation. Now it's a little bit past 2 months. And, we take out Friday's high. We're above 240. You want to be long just to see how we act above there. And you could capture another couple of bucks pretty easily today, tomorrow, if that breakout falls through. I mean, if you look at the last time, let's look at the last consolidation. It was December 13th. We gapped up here January 25th, February 9th. So about 6-7 weeks. And we took out this high here above 230, 229 and a half, and we got to 235 in a hurry. So basically we get above 240.50. Your thought process should be 243 to 245, something like that. On the IWM side, it's a little bit different in the sense that more weakness over the last 2 weeks, a couple of downtrend days. Let me go 2 weeks. So in the last 2 weeks, you had this one clean downtrend day from 141 to 139, and then after the small retracement, we had another pretty nice down day on Thursday from almost 139 down to almost 137. Looks like people were waiting to buy it there. Then on Friday, we closed above this level we've been talking about for the last couple of weeks. So this morning, I guess we're right there. So there's definitely a divergence here. Now, let's not forget, after the election, small caps were much stronger than large caps. The market overall went up, but small caps, maybe because people were racing into domestic names, worried about trade wars. And there's other Trump policies that you would think would help domestic smaller companies. S&P 500 companies have a lot higher percentage of their revenue from international. And so the focus of market participants was like, hey, Trump might start a trade war. He might have other policies that are good for domestic companies, less regulations, that sort of thing. Money piled in there. The problem is with small caps, there is not nearly the type of liquidity you see in the large caps. So they very much outperform to the upside. Now, if we're not going to have a trade war, which it seems unlikely, that takes away part of the reason why people piled in. And now that they're showing relative weakness, there's the danger that they could come off a little bit more, nastily. And they did hold 137 here, which was this gap fill. And as long as they can hold above the 138.50 area, you don't have to really think about a deeper pullback. But below 138.50, you have to be on guard for it. And if we take out last week's low, very quickly in a hurry, you could see us coming down to the bottom of this consolidation range. So that's kind of the picture on both sides, large caps and small caps. Not a lot in play today. I'm just looking at HCMP. I didn't put any support there because it's at a multi-year low. Now it's in the worst sector, pretty much the worst sector in the market that we've seen since coal a few years ago, which is kind of the generic drug space. Led by VRX, which went from, 280 or something down to 10. And then HCMP was holding up pretty nicely. They gave, over the last year, I've been following it closely, they would give good guidance, and it kept on bouncing to the low 20s. Now they finally lowered guidance, and it's making a new multi-year low. So here's the kind of the picture. And so obviously they started acquiring their drugs and doing better here. It ran up from $4 to $18. And then in the biotech wave at the beginning of 2015, that's when it went crazy. So now it's working kind of its way back down into this area here. I bought a little bit just to keep an eye on it into 10.5 in the pre-market. Let's zoom in and kind of take a look. And by the way, longer term, I'm going to look at buying some of this for longer term. I think over the next 18 to 24 months, down in this 10 area, it probably is going to end up looking good. They had enough cash to buy somebody for $140, $150 million in a developmental stage drug. So it shows you that financially they're doing okay. But overall, that sector just really come in. So here's the first move. It came down to 1060. We just made a new low here, 1035. It's back above 10.5 now. The way I look at it is initially came down, kind of bounced to 12. There's a lot of volume going on. Let's go to like a 2-minute, see if we can really drill down into this. So, and so I bought over here. Was as preparing for the morning meeting. Stop down here and down here. If it gets back above this 1060 now, look for a move back into 10, let's say 85 to 11, and let's see how it behaves. It could roll over again, take out the low, and go down to 10. A lot of the stocks that have been getting crushed recently below $12, we've seen them all come in and test 10. So I'm sure that's kind of the mindset of a lot of people. But some pretty good volume down here. And then in terms of reversal, the 11 is going to be your spot. It did pop a couple times in the pre-market to 11.15. Once the market opens, if it gets above 11 and then can kind of hold above here and does this, you look for a play up to 11.5, $12. So those are kind of the short-term ways to look at trading this. Obviously, if it goes crazy on the open and gets closer to 10, I'm sure some people now you can see it's already popped back into the 60s as I'm talking to you. So back above where I bought it. So there's going to be some good trades here. It's going to do a ton of volume. That's why I put it number 1 on the list. GD is similar to some of the names that we've seen recently that have run up and at new highs in the after hours pre-market and then had some profit taking. We saw that in Netflix, we saw that in Amazon. It's in that kind of sector, that internet sector, just in China. And so let's take a look at the daily. Remember, stocks that are in strong uptrends and doing well fundamentally, you'll have these short-term, very short-term down moves that will last usually 1 to 3 days or so, because people who got in, wanted to get in, got in ahead of the earnings. And the way we judge this kind of is we go out, we zoom out on the daily to see how much it's run up now. This is a bit of a messy chart the last few years. It's just a very wide, messy consolidation. And now with this morning's gap, I guess it takes it above the all-time high. It's right at the all-time high in the pre-market. So when did it put in its high? So it put in the high almost 2 years ago. You can see a bunch of times came into the low 20s, even tried to like break down here. People bought the hell out of it. Probably something to do with the strength of the internet sector in the U.S. They look at those numbers and they ran it back up here. There's enough. This has been going on long enough, and the numbers are good enough that you could see it kind of consolidating above this prior range. But we still have to look for that kind of failure at the prior all-time high for the first thing. And of course, it was above the all-time high by $1 here, and the pre-market people sold it. It came off $2.50. See, this volume bar came in here. This was the bottoming bar. So I guess now the way I look at it is 37. If it puts in a little bit of a higher low here, I'm right on the open. So if you get a flush into this area here, play it for a move back up to pre-market high. Obviously, if it comes to the prior all-time high and has trouble there, you have to be wary of that. Ideally, we would kind of trade in this range in the first hour or so, and then we'd set up for the next move. If it was consolidating above 38, we would look for it to maybe make a new high above the pre-market high. And if it was consolidating in this 37 area here and broke to the downside, we would look for the gap fill and then see what happens. Next one is Coach. Coach is in play by the fact that it bought Kate in a cash deal. We know this was in play the other day and was very strong. Took out our first resistance level quickly in the morning. And then didn't quite get to the second. I don't remember where the second resistance level was. The first one was right here at the pre-market resistance. Even the second one was 43.60, so that's obviously well above there this morning. Took it out in the pre-market, now it's at 45. We've got to step back at the daily to look at this. And it's a cash deal. If this was a stock deal, it would actually be a pretty good setup on the short side, but because it's a cash deal, it's not necessarily. Okay, so if we look at when it gapped down here back in 2014, which started this move down to the 20s, it gapped down to 47. So we do know 45 is going to be a natural resistance. But if we get a close above that today, people will be looking at 46 to 47 over the next few days. It would be a stretch to get past that, I think. So use 45 as an inflection on the open on this one. OLED. So OLED, I kind of referenced this a little. And this one was above all resistance. It's a little bit different. It's actually very different than something that's gapping up that is kind of near its prior all-time highs, where there might be some sellers there. And something like this gaps well above the prior all-time high. Usually people aren't that motivated to sell. Now, we did get a dropout right on the open. To the top of the area, we said look for the dropout. So maybe some people were able to get some shares there at 102. It looks kind of difficult. But if you did, you were very quickly rewarded with a quick 4-point pop. And then let's zoom in after that, because I'm sure most people didn't get it. So in this case, when you get the quick dropout and then the strong opening drive, what you want to do is on the first bar that comes down, this one right here at 940, you want to see what the low is. And in this case, the low was 106. It did actually take it out a couple of bars later. Depending on how much room you were giving it, you might have not been stopped out. You might have been using 105 as your stop, but it was pretty close. We've also, I talked about this a little bit in Winning Trader, where on something really strong, I forget the setup that we were talking about, is we'll see these attempts to kind of roll over from a consolidation, and then it fails, and then the next move sets it up for like the big up move. And in this case, it came right back up, consolidated at the 107.50, held there for 5 bars, and that's what we like to see on the after 10 a.m. So this is actually the perfect example. There's 10 o'clock right here. You have 5-minute bars. Now it's a high price stock. It's very thin, so it's not very tight, the consolidation, but held where you needed to, and then broke to the upside and gave you another $6 or so. So if we look at it today, it was accumulated the rest of the day at around 110.5. So if you wanted to get long it today between 110 and 120.5 with a stop below 109.50, that would kind of be the play, and then you'd make a trade up to 112.5, 113, and maybe hold some as a potential second day move above second day of upside. But certainly after this type of large move, we could see 3 to 5 days of consolidation, maybe a new high, then a pullback into this range before the next big move happens. And then Tesla, I thought Sammy on our desk did a really nice job sending me messages while I was away on GChat, talking about how he bought this, had the big down day here because I guess the SolarCity news. And then, as buyers have done for the last couple of months since it broke out, all-time high, buyers stepped in. And was a perfectly good buy, I think, Thursday in the mid to low 290s as a bigger picture play. And then on Friday, when it got above the afternoon high here of 298 and change, or above 300 as a momentum play, quickly came back to 305, 306, which is resistance we know. Consolidated there the rest of the day. People bought it into the weekend, gapping higher now. Buyers seem to be back in control. So I guess the way I would look at it, I'd have an alert 308 to 309 here. See if it holds this right here. If it does, and you buy it, and you risk $1, it quickly gets back above 310. You might walk into a move back up to this 314 to 315 area. I don't see anything in the chat, so I probably will not be trading the open as I have other things to attend to. As always, be patient and good luck.
Hope you enjoyed that video. You can actually watch that video if you're subscribed to our Trader 90 before the market even opens. What stocks are in play? What levels in those stocks are important and how we might go about attacking that stock. That's Steve Spencer, 20-year veteran trader, laying it out there every morning before the market even opens. A really, really powerful tool to start your session off on the right foot. So right now we're offering a trial that you can take advantage of to access this meeting and other meetings throughout the day. We have a meeting at 11 a.m. Eastern where you can sit down with Mike Bellafiore and listen to him talk about what's going on during the morning session, what stocks were in play, what the best trade opportunities were, as well as maybe some things that we're looking at heading into the afternoon session. So I really encourage you to take advantage of that trial.